Thank you very much, ladies and gentlemen. We move on to our next session now, Reimagining the Credit Ecosystem with Alternative Data. And it is being moderated by somebody who has no idea what he's talking about. I refer, of course, to myself. Happily, I have a panel that does. So I'd like to invite to join me up on stage, please, Gunit Chadha, founder, Apac Financial Services, and former CEO of Deutsche Bank Asia Pacific. And also, we'll hear again from Rajesh Mirjankar, Managing Director and CEO of Kiya.ai. Vikas Kumar, Chief Technology Officer and co-founder of LoanTap. And Akshay Mehrotra, co-founder and CEO of earlysalary.com. Panel of experts in different areas. We have consumer-facing fintechs, we have banker turned non-banker, we have technologists. So we can look at the topic from all the angles it faces. And the first one, and I want to put this to everybody on the panel, please, because I'd be interested in each of your views on this, is what is alternative data? What are we actually talking about when we say we're using alternative data, or we can do X with alternative data? So let's start from the left-hand end with the fintechs. What's your understanding of alternative data?
Robin, I think many of us spoke about what is alternate data, how do we use it, why is it used, and what's the benefit of it. See, at most of the time, we're trying to make an algorithm or a scorecard which says that we can predict risk or a customer intent better. Let's say an erstwhile alternate data meant capturing, let's say, SMS or some content data of the consumer on a non-financially available platform. But over time, it's actually moved to understand the consumer in a much better manner, re-looking at the same data with your previous experience and giving better results. Now, data is actually very large, right? At one point of time, we come and talk about millions of data points coming in and we taking out variables out of it. But let's look at some of the very simple elements, right? How fast does a customer answer the questions? In traditional world, you could not measure that because a person was filling up your form on your behalf, right? And he would always put the right answers. In digital world, let's say on an early salary mobile app, we are measuring every clickstream data of the consumer, right? And that goes into a variable to say, if you look at in a larger sense, people in a hurry are more desperate for money, while people who wait out and answer the question correctly are more patient and will be more responsive with the money given to them. Now you can use it as a newer variable, or you can say it's a judgmental answer. But over time, it comes as a result to say it adds up to value or not. Now, there are lots of such variables available. Let's say sound. Today, listening to the consumer gives out an answer because NLP is possible on it, right? And there are going to be various things of analyzing how to use alternate data beyond what the normal human eye can look at, right? It's the capabilities of new age companies to analyze that data which makes it being called as alternate data.
Vikas.
Yeah, I agree with Akshay. So basically what we are doing at our side is, you try to combine traditional data like CIBIL scores and stuff like that. We typically do higher loan sizes. So I will not shirk from also looking at traditional data. It does have value. So, the basic assumption is now that we have alternate data or modern age data, we stop looking at traditional data. Well, we have taken an approach that both of them are equally important. So we use AI tools and various scoring algorithms to combine various traditional data and modern data. Now, the modern data could be a voice, a sound, SMS, the time he takes to respond. If you get somebody to talk, the way the person talks, right? If you do a video call with that guy, the way he responds on a video call, each of these data points creates some value in the system. Maybe how many friends he has on Facebook also creates a value, right? So,
You mean those likes are important after all?
well, see, a lot of it helps in fraud detection. So if you go and find somebody having only 2 friends on Facebook, chances are very high he created that account, that Facebook account, only to get the loan. Right? Because normally people would have some more friends, right? If somebody has only 2 friends, it's a bit scary. Right? So, and that's quite common actually. People will create a fresh LinkedIn profile 3 days before applying a loan. People will create a new email ID, absolute new company. So we had one guy, he created something similar to TCS. He actually created a fictitious company. He created a fictitious email ID. He created everything around TCS. He just called it tcsinfo.com or something like that. He bought the domain name. He did everything possible to apply for the loan. So going back, so we collect all of this alternate data, and I think the difference between maybe what Akshay is looking at and me, we would be blending more of the old data, traditional data which banking uses, and many of the modern data to create sort of a basket of data. But we've also realized that after 5, 6, 8, 10 pieces of data, most of it is just noise. So each company has to decide which 8, 10 pieces of data is suitable for its segment. Once you do that, broadly it works out fine.
Gunit, if I can ask you, what kind of data are you looking at when you're taking decisions in Apac Financial?
So firstly, I think Sanjeev called me in here to make Akshay and Vikas look better, right? But I'll take that. See,
you're not the oldest person in the room. You're not even the oldest person on this stage.
That is true. That is true. See, what is alternate data is also a reflection at a bit about when is that question being asked. If I go back to my early days in banking, balance sheet was the structured financial data and cash flows was alternate data. You go a decade further and suddenly the civil scores and everything else became alternate data, right? Because now cash flows were also available. And you go one step further and now bank statements and bureau scores are no longer alternate data. You have all the other social footprints and everything else, psychometric tests and et cetera, et cetera. In fact, I had some of the brilliant young startups who came into my office over the last couple of years, and they were talking about they had 5,000 data points, right? And I really felt that I was pretty inadequate, right, to sit across the table with that audience. The fact is, I think it's NRN said this, right? What did he say? In God I have faith and in data I trust. So that is for real. So there is no question that data is king. And the question is, you want 5,000 data points, or as you said, you want 50 data points or 5 data points. The question is, do you want alternate data as the basis of credit decision, or you want that as a sort of check to your credit decision? What Apac Financial does, right? And I'm saying this not as a sleazy sort of sales pitch. What Apac Financial does is slightly different from what most of the fintechs do. We give 0 unsecured loans. All are secured, are backed by property collateral. We don't lend to consumers. We only lend to micro SMEs. And we don't lend in urban areas. We only lend in Tier 4, Tier 5 towns. Now, that entire population of micro enterprises in Tier 4, Tier 5 towns, half of which have never taken a loan in their lives from the formal economy. And as a result, most credit appraisals are assessment income-based, right, without any structured data. Most of those need a lot of alternate data. But sadly, most of the development in alternate data have happened on the consumer space. Most has happened in the urban space. Most of it has happened with customers who have documented income. They have a salary. They have a tax return statement. They have an employment record. That's not the case in what we do. So yes, our need is serious, that we need to build an alternate data repository, which is what we are doing every single day. Our CTO is right here in the audience, Nikhil Bandi, who came on board recently. And he's building the data so that tomorrow we can use the data more productively. But here's an offer to any one of you who are in the analytics business, who believe you're strong at analytics and transpose your skills from the urban world, from the unsecured world to the secured, sort of semi-urban rural world. Apac has a real offer for you. Just come on board, right? So back to you, Robin.
Yeah, applications, if anybody's interested, I guess. But having heard from our first three panelists, the man who ought to have the answers is the technologist, because we've heard to an extent what alternate data is. How do we process it? How do we manage it? How does Kiya put it in a form or present it to decision makers in a form that helps them make that decision?
Yeah. I'll try and give an analogy of a mask, because that's what is in at the moment, of what is alternate data, and then get to saying how we are looking at providing it. The fact is that, I have a handset that recently the operating system gave me a patch of saying that now from tomorrow, after loading this patch, we are going to recognize your face with a mask. And I'm just saying it was just about time I was thinking of dropping it. So it's just technology that's come a little late. But the fact is, it's very similar to that. Alternate data provides the ability to read someone's ability to take a product or our ability to lend with a mask on. And it's the same way as how banks have classically stepped behind without that operating patch, system patch, to say that we will want you to pull down the mask and we want to look at your credit score, which looks like this. And then you can put it on and say, now let me decide to take a decision on the loan by seeing what you earned at just about a minute back. That is, you put on your mask back and I'll lend you back on your credit score. So it was an excuse to say that I will do safe lending. And if you see what the three successful fintechs have done here and changed the landscape of how unicorns have come up in lending space in India or worldwide, it's the fact about using data as a power to lend quickly and seamlessly. It's lending at the click of a button. So I think from a technology perspective, we've looked at the areas of using artificial intelligence, although that's a cliche, but in true effect, it's to look at saying there is a huge legacy of data or heritage of data, I would like to put it. It's not legacy because it's not going to go away. It's heritage, it's going to stay forever, and it needs to be protected and it needs to be elevated, right? That data has a lot of meaning in it. I took the example of smelling cinnamon earlier when I spoke. And it's exactly the same, that you need to bring the emotion in the data that signifies saying whether it's a yes or no, based on what you have, than just to say what came from an external agency. Because the whole spirit of the aspect of your relationship with your consumer is the trust that you have in him and he or she has in you. And that is what alternate data looks to build. So what we've done is look to build various areas. So we've, everyone's spoken about it, social media, what data I have in terms of bill payments, what data you have in terms of past loans paid, look at the whole bank statement and just run through the script and say how does that flow work, look at the social network, and those areas to now bring positivity of saying how close am I to taking a lending decision that could make me give a loan sooner.
Okay, Gunit, can I come back to you on the point you were making, discussing how banks had extended the use of the data, and what was alternative 5 years ago was no longer alternative but was mainstream, and there was a new alternative. Banks have a lot of data, there's no doubt about that, but a lot of it is still siloed. Are they at risk of becoming dinosaurs in the new data world?
I think bankers may become dinosaurs, but not banks. I still remember during the global financial crisis, when probably many of the startups didn't exist here, there was a lot of debate whether the shadow lenders were going to go extinct. And some of us, certainly I felt at that point of time, that shadow lenders would never get extinct because they were effectively, through the global financial crisis and even beyond into the European crisis, shadow lenders were the only ones which were open to lending. And banks had virtually shut down their lending into the SME world of each and every country. And so that thesis that, shadow lenders were out of business because they did not have liquidity lines from banks and they were becoming extinct was actually not true. They became even larger and bigger. Today we have a reverse question being asked. Are banks going to go extinct? And I believe that what I've seen now happen across the banking system, and I've been in a few across the 3 continents, that banks are fast changing themselves as well. And once banks actually get their act fully together, and it's happening every single day, you will see what seems like an elephant out there. You will gain huge amount of agility and will become very powerful with the big data in tow. So longer term, not even longer term, I think 5 years later, your threat's going to come more from the banks than it's actually going to come from the other fintech companies. And be aware of that because banks will have a 500 basis point lower cost of funding than most of the fintechs around, right? And that's massive. And not to show every fintech will be able to absorb a 500 basis point differential and not have massive compressions in the margins. So I think it's people like on my right, who are making banks change. Banks are hiring, who's the next speaker? I saw Nitin Chugh here, right? Coming and becoming the State Bank of India's digital head, right? These guys are changing fast, and so you better watch out from them. And the irony of the situation is that as these fintechs become bigger, and don't get me wrong, Apac is going to go exactly the same way, as I'm sure with many of the others. We're going to get bigger and bigger and bigger. But the day we become too big, you want to become a bank, right? So you better make sure banks don't run out of business, otherwise you'll be the only bank standing out there. So net, I think there is room for all of us, right? Fintechs will lead the first 100 meters, first few kilometers in the marathon. Banks are not so far away. And when banks move, it'll be pretty traumatic for many of the lenders who truly are not adding value to the customers. The previous panel spoke about payments, and I was very keenly actually noting down some of the comments which were being made. The question is not whether payment companies are generating consumer surplus. Of course they are. But are they going to remain in business and profitably and sustainably? So that's the question, right? And it's the same question all of us should be prepared to ask ourselves. Are we going to be in business if we're not truly adding value to customers, right? Whether that value is coming from tax or whether it's coming from, assessing their incomes better, etc. But back to you. Stay friends with banks. They're going to be around a long time.
Let's get back to alternative data. And I want to ask you, Vikas, the problem, and this has been characterized by some of the things that have been discussed already this morning, the problem with lending at the moment is that it's unequal. Are the opportunities there for alternative data to remove or reduce these lending inequalities?
Yeah, I think that's most probably why alternative data started, existing in the first place. Because when you're underwriting, let's say tier 3, tier 4, as Gunit also put, the data available is very different, right? So, credit card, we talk so much about credit card. How much of India actually has a credit card? It's negligible. So, as you go into different spaces, and that's where I think the fintechs are excelling, you have a different set of alternative data available, and you start using that data to underwrite that segment. One of the obviously difficult segments is like the SME segment and the the farmer segment. So now people are finding alternative data in the farmer segment, right from the quality of the soil. Right? So somebody who has a better quality of soil will most probably, chances that his crop will grow will be better. And therefore chances that he'll repay you will be better. Right? So do you have data about the soil analysis? Yes, you now have. 5 years ago, you did not have. So as we are moving forward, and a lot of non-fintech companies are creating data in the system. The fintech companies are consuming that as alternative data to underwrite more and more complex or more and more underwritten segments, right? So yeah, it's definitely going to be there, and it will definitely help us reduce the inequality.
Well, let me drill down now with you, Akshay. What do you see as the market opportunity for alternative data or lending based on alternative data?
So I think let's look at combining both the two answers here and then with your third question, right? So while banks are going to be very large, fintechs will build up newer alternate ways to attract the next segment customer. But let's not forget that India is still a banked customer base, right? In fact, I spent some time with a large PSU bank. He had 1 crore active customers. 57 lakh of them had a savings account with them. Right? And I said, and we did some work to figure out how many of them can we actually lend to. Interesting number came to 42% of them we can offer an instant credit in the next 1 minute. Right? Now that just changes the ballpark. Right? Even when you talk to the bank said, oh, we'll be very happy if you can sell to 1% of my customers in the next 12 months. And here we went and said, let's build a partnership. We'll sell to 42% of them in the next 1 minute. Right? It changes the way you look at solving the problem of credit. See, credit is the most universal accepted product in the world. When you give money, people accept it. Right? People have lots of aspirations in life. Someone wants to buy a TV, someone wants to fuel his company, someone wants to start something new, someone has a cash flow, someone has a medical emergency. But if you give money, people find use cases of that money, right? And this is what is very important. Can you use data to time when he needs the right amount of money, right? And that is what is successful entrepreneurship. Today, if you look at a little company like mine, we're just 457 employees, right? We have now done 2.5 million loans, right? This year, coming year, we plan to do another 2 million loans. Whatever we disburse in our first 6 years, we're going to do in the next 1 year. Half of this is not going to be only on our own platform. We'll work with banks and other financial players to lend to their customers, right? But can you imagine a little platform which has less than 500 employees will go and do 2 to 2.5 million loans without increasing its manpower, using a seamless alternate lending system? 92% of the time we can predict risk 3 times lower than the bureau can on the same customer segment, right? And when you combine this, right, when you look at the opportunity size, it really changes the way lending can help everyone monetize. Right? When you bring in optimization because of alternate data, your OPEX cost to service the consumer comes down. See, everyone has access to similar data today, from a bank to a traditional player. Everyone can get the same bureau, the same bank statement, and a lot more transactional data of the consumer. But can you bring that cost down? Today, let's say at my company level, it's sub $5. Cost of actually giving money and recovering money is less than $5. Now look at the operational efficiency. It means that you can give a person, let's say, 30,000 rupees and still make money, where the nearest product from a classical bank, you're 30% cheaper than that. Right? And this is what drives consumption. When you bring simplistic solutions for consumers, when you give transparency, when you ask for less questions. Today, an average customer, let's say 92% of the consumers who come on our platform gets decision in less than a second. It's a real-time, non-human interface decision. He gets money in his bank transferred. He's already with the bank. If my system is there, and we can build out so many more things. And this is why people accept products from us. we become cheaper than the next banking instrument, we are faster than the next banking instrument, we work maybe directly to the consumer or with his bank, but we make sure that the money comes to him in real time, and that's what people like. And this is not small numbers. I'm sure if you look at the fintech category, the top 10 consumer fintechs have already done or have active consumers more than the entire credit card industry. The credit card industry is 44 years old. Fintechs are not more than 5 years old, right? And look at the speed of acceleration. And this is all coming in very fast. I think it's partnership between data aggregators, banks, fintechs, which will impact more consumers. There are at least 70 crore Indians where lending can be powered in any format from SME to consumer lending. It's really about the coming together of all three entities which will fuel the growth. Right? And can we introduce, let's say, a 10x growth in the next 36 months? And that's the opportunity.
Well, I guess it's about managing risk and about managing cost and the technology that does that. Rajesh, if you'd like to comment on that.
Yeah, so I think in terms of working out technology for alternate data, we would look at a model where we are able to pull in data from multiple sources. So it's not just about what's lying in a banking database, but also what's there in the ecosystem. Just to tell you, for example, that the example that Vikas mentioned in terms of farm lending, soil health, the ability to sort of analyze that, whether to say in which, whether are you lending for, let's say, buying the seeds. Of course, you have DBT as well now to sort that out. But at what time are you financing? Who are you financing? And how well is that going to come out because of that ecosystem for which you financed? So it's not just about who, but also about where, when, and what. So these are the things that we look to cover in from a technology perspective, which obviously means that we will collect data from unstructured sources, such as weather reports, feeds that you get from weather reports, feeds that you get from soil health, feeds that you get from, in terms of agri-lending, for example, feeds that you get for consumer behavior, etc. And then look at how you determine the credit score. One of the things that we've looked at also is to say that I've always wondered this as a consumer, that if I had a overdraft in my savings account, my credit score would drop. But if I had a positive balance in my savings account and then took a loan to that effect anyways, my credit rating would go up. And there's no logic to have that. It's only that I didn't ask for it, and it happened for the reason for my credit rating to go down. And those are the simple nuances, I think, that has to change in the way banks perceive risk and look at models, because just having a credit model is not going to affect. It's as if you're writing an exam with a stencil, so you're going to go slow and probably not finish the exam with good scores. So if you want to really grow fast, you will have to have freehand writing to make sure that you're not stenciling your model, but really using the power of data that is outside of what you perceive on that desktop to then aid you with knowledge. So there you have various algorithms like using, let's say, TensorFlow algorithms, CNN algorithms for detecting change in, let's say, tone of voice, CNN algorithms to detect the aspect of what has been the flow of forms that have been filled by the customer. Also looking at, let's say, a psychometric analysis of when the data is entered by the customer, how soon did you get the answers. Those are the areas that we would look at in terms of providing online data. And I think with the power of smartphones and online sort of access, you are able to then get this data input very clearly from apps. You're able to get this from websites. Your agents who then would also do that. In fact, I think a lot of banks are now looking at fintechs to sort of do origination in terms of loans, and that has become a very successful collaboration tool for banks as well. So overall, I think those are the areas that we provide as technology to make sure that from a back-end perspective, we are able to provide technology that works rather than technology that people think that would work. It means that you have to derive a lot of meaningful output. It's not just about what technology you used. Like, for example, I can tell you that you can read up today that the prospect of quantum computing is huge. The fact that I can detect that quantum computing being a simple example, as you read on Wikipedia, that you put a red ball and a blue ball in a box, and what is the possibility of you drawing a red or blue box? That is how credit model is running today, right? But if I were to shake that and use quantum computing and say, what is the likelihood that it will actually look purple to me? Because it's a combination of red and blue and there is a mid state. That is what a credit is. That is what alternate data is in terms of giving you that ability to lend faster. And those are the technologies that we will continue to use. So I guess to answer your question, artificial intelligence as of today, based on NoSQL data, that is based on reading unstructured data as well as structured data, a lot in terms of profiling the customer and ongoing basis, so it's machine learning as well. And what we see for the future is the ability to use quantum computing on a cloud to be able to give proper and quick credit decisions.
I would, of course, remind you that the definition that Rajesh was reaching for a bank there was the institution that offers you an umbrella when the sun is shining and requires it back when it's raining. Now, before we go any further, can I just have a taster of audience interest in questions? If you've got a question, can I just see a show of hands? Have we got any? Yes. Well, let's move to audience questions before we move to a summary.
My question is for Mr. Gunit. With respect to alternative data point, like as you mentioned in your talk, that bank cash flow statement was alternative data, it became a part of mainstream underwriting model. Now a lot of fintechs, lot of alternative data providers are creating a lot of data. So how do you see in going future that so-called alternative data model becoming part of a traditional credit model and they are influencing the decisions? Second is, how do you see that they are helping to select customer with help of alternative data? For example, say bank's model say 70% of property value you want to give. To what an extent alternative data can help you that rather than 70% of property value, you can lend them to 90% of property value?
So at Apac Financial, the truth is that the only basis on which we lend, everything of ours happens on that mobile, right? So we are digitized from the right to the front end, right into the back end. The surprising thing is, or maybe it's not surprising, is that even though 50% of our borrowers are new to credit in those tier 4, tier 5 towns, our cash collections are less than 1% and have consistently been less than 1%. That borrower out there is a very smart borrower, right? He or she know that as they demonstrate less cash propensity and more sort of use digital channels, and there's Google Pays and all over the place, that borrower knows that life's going to be better for the borrower if it gets more into the digitized world. We are also capturing a lot of data. You spoke about soil, Vikas. For instance, one of the segments we lend to is dairy farmers. And there's a huge amount of science which you can have on dairy. The kind of cow, 4 buffaloes going to 8, or is it 2 going to 4, or there's massive differences. You can create scorecards out of that. You can capture a lot of other information about the borrower, about the business. You can start templating it, standardization. The point which I'm making is that we really need help from a lot of the fintech fraternity, from a lot of the analytics fraternity, to come and play in the space where they're not today. And I think there are 2 areas which we are doing right now. One area we are doing is, as you said, 70% going to 90%, right? Why can we increase our disbursement to login ratios? Right now it's 30% for us, right? And that's obviously something wrong. But the problem is that the 70% which we are rejecting, you can always design products for them, right? So I think the errors are happening on both sides at the same point of time. While we are aggregating a lot of data, collecting a lot of data in a form that it is digitized and can be used on the forward, the amount of analytics which is happening in that space right now is not sufficient. And I really hope that that changes over a period of time, because when that changes, our OPEX to AUMs and our ability to increase our disbursement to logins and frankly, value to the customer in turnaround times, et cetera, only gets better and better and better, okay? So it's really a glass right now, which I think is a third full. 2/3 of the journey is yet to happen right now in the business which we do, which is non-consumer, non-urban, non-documented income. But it's a very powerful business. One thing I want to just share with one of my startups. We started live 4 years ago. We've been profitable 12 quarters in a row. That's a discipline which you may wish to create or not wish to create. The choice is with you. We wish to create because it's very easy to spend someone else's money, right? But that's a choice for you. It's a choice we created when we started business. So you sort of eat what you kill. And if you've not killed it, you go hungry. Simple as that, yeah.
What an analogy to end on. Can we have the microphone at the front here, please?
RBI recently has created Fintech department. So are they willing to, planning to regulate these Fintechs? Yeah.
RBI is put a Fintech segment inside. So I think most of the Fintechs, we actually got together and started working with the regulator to start coming back on what is our requirement, how do we get representation. So a year and a half back, in fact, I'm one of the co-founders who created FACE, the Fintech Association, right, which is actually lobbying to say we want an SRO. So over the last 3 months, the regulator actually opened up to say, let's build an SRO specifically for Fintechs, because Fintech is very complex, right? The way we grow is disproportionately large. The way we service consumers is also very large. The impact that we're generating is large. And the regulator understands that the way we run our companies are also going to be very different. It needs a very different perspective. There's a lot of co-lending happening, there's a lot of partnerships happening, a lot of data flows which happens very different, right? And I think the first part which the industry got together was to churn out the rotten apples, right? We saw a year and a half back lots of the subprime lenders coming in from China and Latin coming into India. I think almost 380 of them got banned. Right? Now it's about regulating the good boys, right? Making sure that there are processes which are tuned for our business, right? I think what took place in MFI after 10 years of building MFI, when AMFIL came in, more department structure came in, it's going to happen now in Fintech. We're waiting for the guidelines to come out. Clear indications have started coming in that there's an SRO coming in. There is going to be compliance coming in. And today we see the industry coming together. Unlike any other industry, I would say almost 80% of the industry started coming together and form these associations so that they can talk and have a common language. And that's already out in the market.
Akshay, my question to you. See, your startup company, earlysalary.com, you must be serving urban workers, urban or semi-urban. How about farm workers? Are you taking alternative data from the farm workers' point of view? Even Vikas was also telling that taking the soil data and all that. So are you helping farm workers? Most of the rural areas, we find a lot of farm workers. They need this kind of assistance, what you mentioned, the credit and all that. How are you helping that community?
Questions. May I know your name, please?
My name is Chaudhary. Chaudhary.
I like the question. I think what you're saying is how do we look at data coming in of a specific industry to fuel the demand of people who work in the industry. I think today we run multiple businesses to fuel this large demand, right? The first is an instant app anyone can download and take money. The second is true to the name early salary. We actually work with the employer to provide credit to the end employee using a data coming in from the employer. So it could be a delivery boy for Amazon working on third-party payrolls of Quest, where Quest actually feeds data of real-time attendance, how many times did he work there, what's his daily income, monthly income, etc., and provides a deduction system on payroll to us. And that's why we lend to the largest employer in the country, where 94% of the employees are grey collar. Right? So same is universally used for any other employment basis. Right? As long as we have access to data, as long as we have access to deducting money, right, we can build a product. It could be versatile. Maybe I can give examples. Daily finance for taxi cab drivers, right, because they earn per ride. You can deduct per kilometer. Right? A product functionality is actually built in and live and running. Similarly, a high-end IT programmer who's now started doing, working like a gig economy, right? How do you provide, because through the gig you know how much he's earning. So you're discounting the gig income which will come over the next 12 weeks and giving him a credit. See, credit can be creatively used as long as you have access to data. The example I gave you, a Quest, the same example can be used in a grey collar, blue collar economy, and that's what fuels. It's not that we are metro skewed. We started as a metro skewed company because the market takes times to mature, right? Give an example. Bangalore used to be 20% of my volume where I did work in only in 17 cities. It still is 20% of my volume, but now I'm across the country available, right? But there is a demand available, but data fuels the next demand and next products available for them.
Good afternoon. This is Dhavalia calling from, I'm from India Ratings. My question to Gunit, you spoke about how banks are changing and their cost of capital gives them an upper hand. And as fintechs continues to grow, do you foresee a fintech company acquiring smaller banks in India going forward?
Before you answer that, I'm just going to say, ladies and gentlemen, this has to be the last question, so Gunit.
Well, it could be, could very possibly be, though I would think the inverse is more likely. The inverse is more likely. I think some really smart, good, young fintechs which are getting created would be very logical acquisitions by the banks. So I think it'll happen on the reverse here. And for the very simple reason is the impact of that tiny acquisition, and by tiny relative to a bank, could be massive from a bank. So huge amount of value gets created. But could the reverse be true? If some of the fintechs are truly well capitalized and they're embedded into the system, yeah, it's absolutely possible. And by the way, I think I'm of the view that banks should do away with these categories of licenses which exist. You know, payment bank and small finance bank and universal bank. If you're good to do banking, become a universal bank, right? Be subject to the same compliance and regulatory costs, but also the opportunity set which awaits. And that should come to the fintechs. 100% I think that should happen, and I would hope that the regulators actually make that happen. It'll be good for the industry.
Thank you.
Let me finish on a final thought for you, ladies and gentlemen. Our topic was reimagining the credit ecosystem with alternative data. The bottom line is that alternative data used correctly, processed efficiently, will improve your ability to lend. It will expand to the underbanked, the unbanked, the MSMEs that are currently failing to get credit. And it will do so in a way that does not increase your risk profile. In fact, done properly, it could even reduce your risk profile. So that's just a little food for thought at the end.